Hello Sector Watchers, this is the 41st episode of Sector Spotlight on Tuesday the 28th of July, recorded on the 27th. For those of you who don't know me, welcome to the show. My name is Julius de Kempenaer and I'm your host for today's show. And for our regulars, welcome back. I'm glad you're joining me again. It's a full show today, and after a very quick update / overview of what happened in asset classes and sectors last week, we're going to take a look at seasonality and combine that with the actual rotations as they are visible on the RRG. After the break, I will answer 2 questions from the mailbag. So stay tuned, let's get to business. As usual, we will start the program with a quick overview of what happened last week in asset classes and sectors. On the left-hand side of my screen, you will find the various asset classes, with a very strong week for commodities, followed by high-yield corporate bonds and corporate bonds, investment-grade corporate bonds. And as you can see, government bonds and stocks are very close to the benchmark, hardly any change, 0.4 up for government bonds and down 0.3% for stocks. So in terms of the benchmark and the stock and the bond market, not massive moves. However, look at the tails for stocks and government bonds. They have started to curl up and roll over, going in the opposite direction, and that is contrary to what we see on the weekly chart that we've studied last week extensively. And this continued opposite rotation makes me to continue to have a neutral view on stocks versus bonds, so no real preference for either one of them. If we quickly move to the sector rotation picture, we see that again SPY minus 0.3%, not many moves, but the intra-sector moves were rather big. Energy up 2.2%, despite the fact that it is still the weakest sector in terms of relative strength ratio. Most compelling rotations, most catching tails for communication services and technology, who have both entered the lagging quadrant as of last Friday. And on the opposite side, I think we have some interesting moves for utilities and industrials. And I've actually written a blog about these sectors: energy, industrials, utilities, and communication services and technology. It was published on Monday, yesterday, so check that out if you want to have a little bit more in-depth view. For the rest of the show, we're going to spend on seasonality and mailbag questions. You know, you can always reach me at Juliusdk at StockCharts.com, and if it's interesting enough, we'll bring it to the show. As we are approaching the start of August 2020, month number 8, it is time to look at the seasonality in the rotations of the various sectors. And if I bring up the seasonal pattern over the last 20 years for US sectors, there are no real outliers. Communication services at 25%. That means that 75% of the time communication services has been underperforming SPY in the month of August. That is a strong number, undeniably, but the problem is that communication services is a relatively new sector which has limited data, just like real estate. So that for that reason, I am a little bit reluctant to heavily use data for XLC and XLRE. Nevertheless, that 25% or 75% odds for underperformance is a significant number that we're going to put into perspective in a minute. The 2 highest values are for technology and for healthcare. 65% of the time, those sectors showed an outperformance in the month of August. They outperformed the S&P 500. Now 65 is decent, but it's not like over 70 or 75, which is when it becomes really interesting. If we look at the performance numbers for those sectors, then we see that Energy has the lowest expectation, minus 0.7%. The seasonality for energy is about in the middle, it's 45%, but the expected return is pretty negative. So we can try to see if we can bring that into the chart. Technology we've seen at 65%, and we're expecting 0.4 or well, we're not expecting it. We're seeing that 0.4% was the average outperformance for technology over SPY, and a big number for real estate, 1.6%, but with it's 61%. But as I just explained, I'm a little bit careful with real estate and communication services. So I'm taking this 61% outperformance and that 1.6% with at least with a little grain of salt, but it's definitely worth keeping an eye on. And then finally we have utilities with an expected return or a realized seasonal return of 0.8%. And if we put that with a 60% of the time outperformance, that could be an interesting sector in the weeks to come, I have to say. So let's bring that to an RRG, to the chart itself. And here it is. And I'm going to put this one here on the side. And let's see what we have. So this is the returns. We're looking at the outperformance. And then we have communication services right here. And you see that this is the daily chart where you see the tail moving into the lagging quadrant. And a similar rotation is happening on the weekly RRG. If we look at communication services there, you see that it's inside weakening, but it has this rotation into a southwesternly direction, which suggests, at least for the coming days or weeks, some weakness. As I wrote in a blog that I wrote today, so when you're seeing this, it's yesterday, on Monday, the 27th, I highlighted communication services and technology as sectors that are losing some momentum, but both of these sectors have a positive long-term trend. They are both on the right-hand side of the plot. They're going through a pause, and that's what you see on those daily rotations. And I'm basically waiting for these temporary setbacks to complete with a rotation through lagging, improving, and then back to leading, so that they can drag their weekly tails back up to continue their long-term trends of outperforming the S&P 500. So XLC seems to be a pretty good, at least short-term bet in a negative direction. Now XLK is a bit contradictory, although we do see that XLK has already, and this is only one day, so last Friday we had this tail, and today so far we are starting to curl up. It's very, very early, but it could be the surprise move. It could be the turn that we're looking for. So we need a little bit more. It needs to start moving into that positive RRG heading between 0 and 90 degrees to bring it back to the long-term weekly trend, because as you can see here, XLK is still the strongest sector in terms of RS ratio. It's inside weakening at a negative RRG heading, but it is the furthest to the right on the RS ratio axis. Seasonality suggests that this rotation will pick up soon and improve, and we have a similar picture for healthcare, which is now right here. Let me highlight that for you. The healthcare sector just turned around, lost a bit of momentum, and then moved into leading, and then picked up momentum again. It looks to be doing pretty well. Seasonality suggests that this move can continue for the next few days, and if we then see what the percentage move means for healthcare, that's around 0. So it's not a big expected return there. So the best bet, I think, is the negative bet on communication services that has the highest odds. Both tails are moving in a negative direction, and it's a very early call for the technology sector if you expect this tail to curl up again and start moving higher and pick up the long-term trend again. Sorry, it's just, this is what it is. There are no like real very strong outliers in terms of seasonality. So keep an eye on communication services in terms of a negative, at least for the next few weeks. And technology, maybe technology picks up that rotation a little bit faster than communication services. Anyway, that was it for the seasonal rotations in the coming month, or at least that's what we expect based on the history. This question from the mailbag comes from Tom. And Tom writes, "Hi Julius, I've been a member of StockCharts for about 6 months now, and I find your RRG system the most useful of everything I've evaluated. Once I've scanned down to the ETFs I'm considering placing positions on. Can you tell me if the daily RRGs are real-time or end of day, so I can decide if review more than once daily would be beneficial? Thank you, Tom." We've discussed this before, I think, but I couldn't really find the episode back, so I'm not entirely sure. But the answer is, well, yes, they are updated during the day. So with that respect, they are real time. The calculations of the RRG and the positions of the tails are calculated every time you refresh your screen. So they're not streaming. Once you've loaded the screen, the data is static and the RRG and the tails are static. But if you wait for, I don't know, a couple of hours, whatever time, and you hit refresh, or you come back to the page and you reload the RRG, then you will see that the data and the tails and the positions of the securities are updated to the last available price. And to illustrate that, I took 2 snapshots this morning. And the first one, let me go here. The first one, this is a snapshot that I took of the RRG that shows the US sectors. And I copied that page at 11:47 a.m. Eastern. And you can see the prices at that moment for all the ETFs, for all the sectors and the positions on the RRG. Now, I'm going to move to the next slide, and that was snapshotted at 1:13 p.m. today, so on the 27th. And you can see that the prices have changed. So I will go back and forth a few times so you can see the differences. So let's first concentrate on the table, so on the prices here. And you can see that they have changed. So for example, here's an interesting one, the consumer discretionary at 113, or let me say at 11:47, it was at 135.78, down 0.1%. And then a couple of hours later, it's at 136.15, up 0.1%. Or the materials sector, which was up 2.8%. 60, by the way, we're talking, that's maybe my bad. These percentages are 5 trading days. So it's better to look at the price. So it's not like that change is up or down for the day. That's the difference over 5 trading days. So concentrate on the price. XLB 62.31 at 11.47, 62.13 at 1.13. And then just pick whatever you want to see, and you can see that these prices have changed, and so have the percentage changes. They will be calculated accordingly, but again, these percentage changes in this case are calculated over 5 trading days. Because this column shows you the percentage change over the length of the tail. Now, if you move to the canvas, and we do the same, we go back and forth, you can see very subtle differences in where the tails are. So I think XLRE, the real estate sector, shows a clear difference, and maybe also, you know, technology in the morning, and then it improved during the day a little bit. But as you can see, I mean, so they are updated through the last data point, but the differences on the tail and the rotation are very subtle. So evaluating more than once a day, hey, if you ask me, you can't look at RRGs enough. But to be honest, I think you'd be fine if we track a daily rotation, doing it once a day under normal circumstances should be good enough to keep an eye on what's going on with those rotations. So I hope this answers Tom's question. This question comes from Kenneth, and I'm going to summarize it because it's a little bit long to read, but it comes down to the fact that, and I myself am guilty of that probably also here in the show, we use RRGs most of the time as a starting point to look at sectors or members of a sector or asset classes or currencies or whatever you can display on an RRG. But he reminds me of the fact that RRGs can also be used in a process as part of a workflow. And it doesn't necessarily have to be at the start of that workflow. And the example he mentions is to use RRGs to display the results of a scan. And occasionally I write about that in my blogs, but I don't think I've ever properly shown it in Sector Spotlight. So I'm going to do that briefly, and I'm going to use the scan that I use a lot, and I use it for ID generation, and that's the scan that searches for the turtle soup setup that was promoted by Linda Reschke and Larry Connors. I love the simplicity and that setup, and especially the complementary, the way it complements, because turtle soup, and I will post the link to the article or a few articles in the comments below the video once it's on YouTube. But in short, what turtle soup does is it looks for fake breakouts, so failed breakouts and then bouncing back. A little bit too much to explain right now, so go read the article if you haven't already. And I've written a scan for that. And let me bring up that scan. It's in my, of course, in my scan workbench, and it is SPX TS, and I've got two versions. One is end of day and one is intraday. So as the market is open, let's look at the intraday version. By the way, I also have an alert set on my phone to text me when this scan has triggered. And as you can see, I got a text this morning that this particular scan, SPX TS buy intraday, was triggered. So when you get that text, you go to the screen, and here is the scan code. It is somewhere in the articles. If you rather want to have it from me, just drop me an email. I'll be happy to share this code with you. You run the scan, and you see that today I got 6 results. Now what you could do or can do is save those results in a chart list and then run the chart list and throw the chart list at an RRG. But because it's only 6 names, what I'm going to do is I'm going to use the top bar where we normally bring up our sharp charts. I'm going to select RRG, and I'm quickly going to type in the ticker symbol. So that's AIV, that's CCL, that's MGM, that's SLG, that's SPG, and VNO. So these are the 6 names. Is that right? Yeah, these are there. So this is the weekly, because it's a relatively short-term strategy trade setup. So I'm going to switch the RRG to daily, and now I have the RRG of those ticker symbols, and I'm going to bring that to the left so I can now work on my chart setup that I have here. And let's just go over them just to get the idea of it. What you can see here is that most of them are curling over again, because mind you, these are stocks that are coming down and they're hitting their 20-day lows. So, you know, some sort of negativity is what you would expect. The one that stands out for me immediately is SPG, because it's not rolling over. So if you look at this RRG, you can see that they are improving, and now the last 2 days, most of them start rolling over except for SPG, Simon Property Group. Let's just bring on CCL. It's the first one here. And what I'm going to do is I'm going to magnify this actually. So I'm going to put it at 9 bars and massive gaps, so we got a very clear picture of what's going on. And what you can see here is this bar is live. As you can see, it's got a green shade. Today's low is 1362, and that is below the 20-day low, which is 1427. And the turtle soup rule says that a stock needs to make a new 20-day low, which is clearly the case, and then during the session it needs to come back above that previous 20-day low. So we've triggered that setup, and when CCL now comes back above 1427 during the day, the turtle soup trade signal is triggered. So we now have the setup, but we don't have a signal yet because we're at 1385 and we need to go above 1427 with a bit of a margin. So I would say 1440, maybe 1450, where your entry stop could be, and your stop loss would be the low of today's bar. So this is a setup. It hasn't triggered yet. Now let's go to the one that's really interesting. That's SPG, and see what happened there. So SPG, the 20-day low is 59.87. That's why I've got the price labels there, because I can rapidly see. I don't even have to count. I could, if it's close, I need to count the bars, but I can immediately see that this is the 20-day low, so 59.87. Now today, SPG hit a low of 59.03, so that's well below the 20-day low. and we have recovered back above 59.87. So when we hit that low at 59.03, that's when you can put your entry stop a little bit above 59.87. Let's say 60 bucks, 60 spot 10. That's where your entry stop goes. And we are well above that already now. So we're at 61.15. So we got triggered into the trade around 60.10, and we're now trading at 61.15. So for today, the stop loss for this trade is at 59.03, or whatever trade management you wanna bring in. If we go in depth into this and we look at, let's say, a 10-minute short, we can see the dynamics of that trade a little bit better. So here starts today. There was 59.87 was the low. We hit that right in the opening, and then we recover. And as soon as we get above 60 something, so quite rapidly after the low, around 60.10, you get triggered into the trade, and the stop loss for the time being is here, and it's working its way higher. Now, depending on how aggressive you want to be, you could move your stop to now, let's say 59.90, or maybe even already to 60.80. Depends a little bit on how aggressive you want to be, because Turtle Soup setups only gives you a setup and a trigger, and you're on your own as far as it comes to your trade management. Depends a little bit on your trading style. What I wanted to show you is how you could use RRG to visualize the results of a scan and pick from that RRG the stocks that you're extra interested in. So here was the example for the Turtle Soup, but I can imagine that you have a specific scan that looks for something, and you know, when you have your scan result, as long as it is less than 50 symbols, you can throw it at an RRG and use the RRG to fine-tune and look for additional information to get into that trade. So that SPG trade is doing fine right now. Still a couple of hours until the close, so I'm going to keep an eye on it, see how it works. But this one seems to have been working for today. Anyway, that following a question and a suggestion, another way of how you can use RRGs in your workflow to get a different angle at things, and not using RRG at the start of your process, but more towards the end of your process. Ladies and gentlemen, that was it. This wraps up Sector Spotlight for today. Thank you for watching. If you liked the video, please do what you have to do with your thumbs and likes, etc., etc. Questions go into the comments, as will my answers. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern, with replays on the StockCharts YouTube channel. For now, please stay safe, and I hope to see you again next week. If you want to stay up to date on developments around relative rotation graphs and relative strength, please check out my blog on StockCharts.com. When you subscribe using the link below each article, you will get a nudge each time a new article is posted.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.